Hello, good afternoon, everyone, and welcome all of you to this Yashaswini 56 episode. And we have with us today speakers Delisha and both the speakers are there. Nikita. Delisha will be taking us, Nikita Joshi, yes. Delisha will be taking us to the ESOPs, regulatory requirements, and the structuring part. And Nikita will let us understand everything on the artificial intelligence, the practical use, the cloud based artificial intelligence. And today we have with us all the moderators. I welcome uh, Sia Amruta Joshi, Deval, Bini, and Khushbu. And all my dear participants, as our tradition goes in WMEC. So, this is our 56th episodes, and we have completed more than 1 year on Yashaswini and Idol series. And I hope everyone is actually gaining knowledge out of it. And again, friends, we have already announced the Women Residential Refresher course at Hyderabad on 13th to 15th of June, where we will be actually having a lot of panel discussions, the practical case studies. We have group discussions where the issues for women and how challenging and in challenging environment we have to come through with all the works and bring to the leadership. So all those things will be taken up group discussion. You can be the group leader also. We will be forming around 4 to 5 groups. So that will be one of the session. The group case studies we are preparing. Along with that, we are also planning industrial visit in one of the factory, that is plant visit of one of the company, so that you'll have and there the company success story, so you will also understand how the industry is growing, what are their norms, and how the actually the plants are operating. So that will be the practical thing. Along with that, we have various sessions like networking, the professional opportunities, and the leadership, the passion. We have also confirmed with Mrs. India, Mamta Tripathi, who is Mrs. India, who will be taking us through the passion and what all actually we can do as a chartered accountant also. And we will have some traditional flavor like fashion show kind of thing in our like states traditions. So this is the broad outline of this 3 days residential refresher course. We have received very good response, and registrations are going in full swing. So I request all of you to please join as early as possible. We shall again forward you the link, and we will soon mass mail and do the SMS also, so that you are already aware. I request Office Ruchi and Jaya to share that in the chat box, and that program, our flyer, and the program in the chat box, and the link to
Okay.
register, so that
Okay,
it
ma'am.
becomes easy for participants to go through and register. So again, the speakers have been finalized. We have not mentioned the details of the speakers, but as I already told, we have very good, eminent speakers. So session is on artificial intelligence, office automation, and how we can reduce the work in routine and use artificial intelligence. And so that also will be practically will be shown and presented, which everyone can utilize in their daily affairs. Along with that, I have already said about industrial visit, the and this group discussions and success stories, the passion. So these are the kind of topics. It will be 2 nights, 3 days at Hyderabad Center of Excellence. The fees are also very less. We have kept on cost to, in fact, with the grant we have considered. So if you plan and visit, your cost may be higher, but we have at a very reduced cost. It is. So, all the speakers, moderators, and participants, you should not miss such an excellent opportunity to meet, upgrade your knowledge, and greet. And revive and rise is a theme of our RRC. With these words, I welcome all of you to this Yashaswini and Idol. We are also coming out with a mentorship platform where we will be uploading the onboarding the mentors who are very seniors and the experienced one, where you can be the mentee and take a slot to have a personal one-to-one meeting with the mentor of your choice, so that they will be able to guide you and guide you and mentor you. So this will be announcing within a month. Lot of work is going on at the back end for this mentorship platform also. So Jaya has already shared the link, and flyer also, Jaya, you have shared to in the chat box. Please share the.
Yes, ma'am.
Yes. So please go through that and visit. And this all the efforts are being done by WMEC. It is because of for it is like our endeavor to serve all of you the best. What we can serve, it is like we are serving as like honorary work for my fraternity, and that is why I want maximum participants should and members should take benefit of this, because lot of efforts have gone in structuring such kind of programs. So with these words, once again, I welcome all of you and giving the charge to the moderators and the speakers. Thank you so much. Looking forward to see all of you at Hyderabad.
Thank you, ma'am. Good afternoon, everyone. CA Delisha Balekar is an associate chartered accountant with a diploma in international taxation from ICAI, and she is a part of Deloitte's India M&M team with 3+ years of experience in domestic and international taxation, FEMA, litigation, regulatory compliance. She has advised startups to large enterprises across sectors and software on structuring investments, due diligence, ESOPs, and GARs. Relisha ma'am, over to you.
Yeah. Thank you so much, Deval ma'am and Preeti ma'am, for such a lovely introduction. Good afternoon to everyone. So my topic is ESOPs demystified, which will include strategic implementation, income tax implications, and FEMA compliances. So I'll just share my screen. Yeah. So kicking off this topic. So, as you would all be aware, what are ESOPs and how this instrument has been in wide news across all the companies and the startup ecosystem to motivate and retain all the employees. So, di- deep diving into this topic, what are specifically ESOPs? So, as you would be aware, ESOP stands for the word or is the acronym for Employee Stock Option Plan, where employees are given a option to be a part of the company's ownership and have the option to subscribe to their shares at a reduced or at a way nominal price as compared to the fair market value. Of course, these ESOPs are subject to certain conditions that are to be fulfilled. These conditions could be in the form of, say, your performance or some targets or the company's performance on a overall basis. And then once the conditions are satisfied, the employees are given the option to exercise and become part owners of the company. So why ESOPs? As I told earlier, since these are a very like these have been in the forefront for all for many large organizations as well as startups to retain employees and issuing ESOPs. Some of the key reasons to issue employees could be as stated below. So one is attracting and retaining talent and making or maybe earning the employees loyalty towards the organization. The second could be uh, the opportunity to give the employees to become part owner of the entire organization. Another one could be motivating performances and aligning the interest of the employee at an individual forefront as well as with the overall organizational goals. Next could be, since it gives the employee an option to uh, apply for the shares at a very discounted rate, it it is a very good mode of retaining the employees. And the fifth one being, as the company grows over a period of time, this allows the employee as well to grow over the period of time and uh, make them feel a part of the organization itself. Going to the ESOP mechanisms, broadly speaking, the overall ESOP mechanisms has been tabulated or illustrated here. First, a company has a draft ESOP scheme in place. This scheme would lay out all the employees who would be eligible for the ESOP schemes, what would be the conditions that would allow the employees to subscribe to the options and the shares going ahead, then what would be the period for which these ESOPs would be available to the employees, what are the year end conditions to be satisfied. So, first, you would have a scheme, then you will have a vesting period over which whatever are the conditions precedent to the ESOP being eligible for the employees are listed. Then you will have the vesting of those options where the employee would have the right to actually have those shares and satisfied all the conditions that are required to be which are eligible for him to get the options exercisable. Then the third step is exercise of the options actually, where the employees give the money and become owner of the shares which they are eligible for. Then you'll have the allotment of the shares, wherein the company will allot the shares to the employees. And then the last stage would be the actual share sale, where the employee may take an exit from the or maybe will sell out his stake in the company over a period of time. Now, what are the general types of ESOPs? Frankly speaking, there are majorly four types of ESOPs. One is the normal stock option plan or the plain vanilla ESOP. The second one would be SARs, which are share appreciation rights or phantom stocks. The third one is the cashless options, and the fourth one would be the restricted stock options. Now coming to the plain vanilla stock options or the normal ESOP plan. Here you would have uh, so this is the normal stock options that the company would have. First, you will have a scheme in place. You will have the vesting conditions assigned to it, and you'll have the vesting of the options. The underlying conditions could be anything related to the target, or maybe the individual's performance, or maybe overall performance of the company, or at times in relation to the stock price of the company. Then once the vesting conditions are satisfied, the employee would have the option of exercising the options, after which he'll exercise and he'll be allotted the shares. Some of the companies who have offered ESOPs could be have been recently are Razorpay, Nika, which is a very recently listed company in India, then Flipkart as well as Oyo Rooms. Then going to the second type of ESOPs, which are stock appreciation rights. Now, what usually happens in stock appreciation rights is there is no actual grant of options, but a notional grant is given for the to the employee to to the employees at a predetermined discounted rate. When then you'll have the vesting conditions as we had for the earlier options as well. And once those vesting conditions are satisfied, the employee will have the option to exercise those vesting options. In at the time of exercising the options, here it could be two types. One is the cash settled options, and the second one is the equity settled options. In cash settled options, as you could see it from the illustration here, so say the shares have been granted at a price, the options have been granted at a price of 10, and the share price is say around 100. The appreciation would be 90. At the time of cash settled options, the gain, which is of 90, would be paid to the shareholder or the employee. And in case of share settled options, the equivalent number of shares would be allotted to the employee. So this is how the stock appreciation rights or the phantom stocks work. Some of the famous companies who have issued stock appreciation rights are Naukri.com, Mindtree, LTI Mindtree, then your Kotak Mahindra Bank in the very recent times. Then going to the third type of stock options, which is cashless options. Now this has a altogether different way in which the stock options are granted and vest to the employees. Now here there is a scheme in place. The first and the foremost thing that the employee is required to do is to inform the broker or the trust of the company that it wishes to exercise the option. Thereafter, the company or the trust will undertake the necessary things in place to and necessary and will arrange for the necessary funds to purchase the shares that the employee is eligible to exercise and uh, purchase the shares from the open market or get it issued from the company. Once these shares are available with the trust, these shares are allotted to the employees. Thereafter, the employee would sell some portion of the shares such that the exercising cost and the applicable taxes on the perquisite value of the employee are say accumulated and sold off by the employee itself. Then whatever are the proceeds from are some of these proceeds are used to pay off the loan and the remaining shares are issued back to the uh, employee in his own demat account or whatever unlisted shares that he holds. Some of the companies who have undertaken the cashless option could be Infosys, TCS, Reliance Industries, HDFC, and Mahindra Limited. Coming to the fourth option, which is RSUs, restricted stock units. Herein, what happens is there is as such no grant of ESOPs or maybe no grant of options. But once your scheme is set and the vesting conditions are satisfied, at the time of vesting, directly the shares are allotted to the shareholders or to the employees. And uh, no options per se are in picture here. Directly the allotment of shares is undertaken. As in the previous types of options also you will have certain uh, vesting conditions like your revenue targets or your performance based targets, but here the only basic underlying difference is that you will directly be allotted shares and not options. Then certain companies who have taken undertaking RSUs are HCL Technology, Infosys, your LTI Mindtree, and Jindal Steel and Power. Then coming to the uh, eligibility of ESOPs under the Companies Act. Ideally speaking, every employee or the director, be it a whole-time director or nominee director or whatsoever directors that a company has, is eligible for being allotted ESOPs under the company's share capital and debenture rules 2014. But the only exception to be kept in mind is that an independent director cannot be issued ESOPs because once he has a interest in the company, he or she will be ineligible to be appointed as an independent director of the company. Further, all these employees, directors, other than the independent director of the subsidiary company or the holding company in, in India or outside India are also eligible to be issued or to be granted ESOPs under the Companies Act 2013 and the rules made thereunder. Now, this is from a Companies Act and a corporate and regulatory perspective. Coming to the foreign exchange perspective. Now, since at times what we see is a lot of the foreign companies who have subsidiaries in India or the holding companies who are in India and have subsidiaries outside India issue shares amongst the group. What it becomes extremely pertinent to understand the framework of the FEMA in these aspects. So, talking from a investment overseas investment perspective, where say a holding company is is set up abroad, you will have a subsidiary in India, and you have the employees of the subsidiary in India. The holding company is issuing shares to the employees of the subsidiary. So in that case, the FEMA overseas investment rules come into the place. Now, what happens in such a situation? Ideally, acquisition of shares under the employee benefit scheme or the ESOP schemes up to 10%, provided it is without control, is considered as overseas portfolio investments. This remains the same. That is, it will be considered as an overseas portfolio investment, irrespective of the fact that the shares are listed or unlisted. But it is just that you should not have control in the company. So, ideally, under FEMA OIA rules, if you make an investment in an unlisted company, even 1% of the investment is considered as an overseas direct investment. But an exemption or, say, a relief has been provided to employees who are acquiring shares under the ESOP plan or the employee benefit scheme to restrict the holding or to provide them a margin of 10% up to 10% for acquiring the shares. Now, what are the eligibility conditions? The resident individual, say the employee, he has to be an employee or a director of any office in India or a branch of an overseas entity in India. Or it can be a subsidiary in India of the overseas entity. The third one, an Indian entity in which the overseas entity has direct or indirect control, equity holding. So this would cover a scenario where a holding company is directly setting up a subsidiary company in India, or a holding company is investing in the subsidiary in India through a SPV route, which is a special purpose vehicle route. And then one of the important criteria is that the issue of ESOP is done globally on a uniform basis. It is not country specific or employee specific. It has to be on a uniform basis. Now, a very important question that arises here is how is the limit under the liberalized remittance scheme considered in case where employees or resident individuals make payments for the shares they are acquiring overseas? Ideally, as you would all be aware, under the FEMA overseas investment rules, the limit for which a individual resident can make payment is capped to 2,50,000 USD per financial year. Now, under and there are certain cases where if you breach this limit, you will be required to get the RBI's approval or the central government's approval on a case to case basis. Now, to deal with ESOPs, the FEMA overseas guidelines uh, have clarified that whenever uh, whenever this limit of 2,50,000, whenever the employees obtaining shares or subscribing to ESOPs under the LRS scheme, the limit of 2,50,000 would be used. But if at all it happens that in excess of 2,50,000 the amount is to be remitted, they would be allowed to be remitted, but the entire limit of 2,50,000 would be utilized. However, considering it practically, we have been given to understand from several AD bankers that even though the limit exceeds 2,50,000, there is no requirement to obtain the RBI approval in these matters. However, in cases where this limit of 2,50,000 is extinguished and you need to make a remittance for anything other than ESOP, a specific approval might be required. But this is a little bit case specific to the stand that the AD bankers take as per the instructions received from the RBI and the central government. Now, going to the taxation aspects of ESOPs in India. Taxation in India arises in two phases. One, at the time of the grant or maybe the exercise of the options, and the second phase is at the time when the shares are actually sold by the employee. Now, at the time of granting the options, as such, there is no taxable event. But when those shares are exercised by the employees, there is a perquisite tax which comes into picture. Now, how is this value of the perquisite computed? It is simply the difference between the fair market value and the exercise price of the shares. Now, and then whatever is the differential, it is being taxed under the head salary, and appropriate withholding has to be made under Section 192 of the Income Tax Act. Now, at the time of selling those shares, which is the second phase at which the taxability arises, those shares could be considered as long term or short term as per the period of holding. In case of listed, it would be 1 year. In case of unlisted, it would be 2 years for shares. Now, the important point that comes into play is the cost of acquisition, because whatever is the differential that has already been taxed in the at the time of exercising of the option in the head salary. So the cost of acquisition for the purpose of computing capital gains becomes the fair market value which was considered earlier for the purpose of taxing salaries. And whatever gain or loss arises is to be taxed at the appropriate tax rate in the year in which the shares are sold. This is an illustrative example of how taxability works at the time of exercising and sale of options. Now, the first table is illustrates the taxability at the first event, which is when the shares are exercised by the employee. So the fair market value of the shares is say 10,000, whereas since it is an ESOP scheme, the employee will be issued shares at a very nominal rate at a very discounted price. So say it is given at 1,000. So the perquisite value that will be chargeable to tax would be 9,000. Now coming to the second taxability event, when the shares are sold by the employee, the sale consideration say is around 15,000. Your cost of acquisition would be the fair market value of the shares at the first taxability event, which is around 10,000, and then the balance is chargeable to tax at long term at 12.5, or maybe at the slab rates as may be applicable. Now coming to certain issues that we come across at the time of ESOP structuring, or what you say, advising clients on ESOPs generally. So the first is whether the employer-employee relation is said to be there in case where the foreign company is granting ESOPs to the subsidiary, to its subsidiaries employees. So maybe you all can imagine a scenario where you will have a holding company, a subsidiary, and the employees of the subsidiary, and the holding company is issuing shares to the employees of the subsidiary. Now we have the Morgan Stanley ruling. We have the Microsoft Corporation ruling, wherein it was held that any benefit arising to the employees of the Indian subsidiary from stock options granted by its US parents were taxable in the hands of the Indian employees as salary. And the parent company was has made such an offer to the employees of the subsidiary only when it regards it as only when it regards its subsidiary as the same concern. So here it was held that though the employees were not directly employed by the US entity in this case, they will still be considered as employees, and whatever ESOP they have been granted or they have exercised will be considered as taxable and will be chargeable to tax under the head salaries. Then there is one more ruling of Justice Devkinandan Agarwal, wherein it was held that it is enough if the sum earned is for the reward for services rendered by the employee. So even though it is not directly rendering services to the holding company, though it is rendering services to the subsidiary, it could fairly be covered and could be taxable under the head salary. Now coming to the second common issue is about the taxability in case of stock option share appreciation rights or the phantom stocks or sweat equity. Now, as I had explained it earlier, just to refresh for all of us, Stock appreciation right is such a case where only notional options are granted at a discounted price, and then at the time of exercising, you will have the fair market value. Whatever is the appreciation is considered or is taxable for the employees. Now, at the time of cash settled options, wherein the employee will get all the cash paid directly instead of any shares being issued. So at that time, whatever amount he is going to receive is taxable under the head of salary. Now, coming to the equity settled, whatever are the fair market value of the shares less uh, less the grant option value of the option that was available at the time of grant, that differential would be taxed under salaries. And then sweat equity is also taxed on similar lines for the difference between the fair market value and the grant and the price whatever is paid for the shares. Now coming to the third and a very interesting uh, issue, in case of non-chargeability or non-recharge of expenses incurred for ESOP by the holding company. Now, continuing the same scenario where we have a holding company, a subsidiary company, and the employees of the subsidiary company below. Ideally, what happens is the holding company will issue shares to the employees, and whatever those expenses will be on the ESOPs would be cross charged to the subsidiary company, and the subsidiary company is required to repay those amounts back to the holding company. This is what generally happens. Now, consider a case where those expenses are charged to the subsidiary company. However, there is an understanding between the holding and the subsidiary company that the subsidiary company is not required to per se remit any amount to the holding company for the ESOPs. So it is just a debit to the PNL, but there is no corresponding payment or any outflow of funds for the expenses. From an accounting perspective, what usually companies do is they charge these expenses to the PNL, and then the second effect is given to the capital reserve of the company. So in this case, in such a case, what would be the allowability of those notional expenses from an income tax perspective? So ideally speaking, expenses on ESOPs are allowed under Section 37 of the Income Tax Act. Section 30 to 36 lay down specific expenses that can be allowed as deduction. Any expenses which are not uh, mentioned under 30 to 36 of the Act are allowed under Section 37(1) of the Income Tax Act. Now, ideally, your ESOP expenses are allowed. Even your discount, which is the differential between the fair market value and the amount at which the ESOPs are granted to the employees, these expenses are also allowed to be debited to the PNL and amortized over the period of the vesting period. But all of these expenses are allowed. But what happens in case of notional expenses? Then deduction is ideally allowed in the year when the business liability arises, even if the amount is not exactly quantifiable at that very stage. Third, this expense is definitely for the purpose of business because it is end of the day being incurred for the overall development and with the main purpose of retaining the employees. So it is incurred for the business purposes. Then your allowability under uh, the Income Tax Act is governed by the provisions of the Income Tax Act and not by mere accounting entries which flow in the books of accounts. And the last one is income tax is usually levied on real income and not on notional income that arise from accounting treatment. So whether maybe drawing the corollary of your income tax on real income, applying that in case of notional expenses, a, a safer view or maybe a view can be made that notional expenses will not be allowed for tax will not be allowed as a tax deductible expense in the income tax returns of the companies. Now, another question that arises in such a case is whether this benefit, so if we consider it from another angle, it is simply a benefit that a holding company gives to its subsidiary company for nothing in return as such. So, since it is a benefit directly to the subsidiary company, will that expense come under the purview of Section 194R of the Income Tax Act? Now, this section only has been introduced over the in the last 2 or 3 years, and there is not much clarity on how these provisions could work simultaneously or harmoniously. But an attempt has always been made to get those things settled. Now, under Section 194R, your uh, withholding tax obligations arises in case of any person. Now, there are certain exceptions to these, which include an individual or HUF or any and persons who do not have business for professional income up to certain limits. But ideally, any person would include non-residents as well. The second condition is providing a benefit or perquisite to a resident. So, if we consider our example, the subsidiary company is a resident in India, then whether convertible into money or not. Now, this is a very uh, important criteria, because in our case specifically right now as we speak, we do not have any inflow of money coming in. It is just a pure non-cash benefit that is being given by the holding company to the subsidiary company. Then it arises from business or from the exercise of the option. Of course, employee ESOPs are definitely part of uh, the business or the profession that the company undertakes, and the value of the benefit exceeds INR 20,000 rupees per financial year, which we assume in most cases would be the case. So accordingly, your withholding tax comes into picture at the rate of 10%. Now, Section 194 was definitely introduced to ensure that whatever benefits or perquisite that residents receive for anything other than cash is brought within the ambit of tax net, and applicable reportings are undertaken. Third, there 194 are one of the situations that 194 are tackled is in case of free samples that were given to, say, hospitals and the doctors for further prescribing to the patients. However, the doctors or hospitals were not ideally required to give out any cash or make any payments to those medical companies. So, can we draw an analogy from this as well and say that provisions of Section 194R would apply to the benefits that are passed on from the holding company to the subsidiary? Ideally speaking, we could take that, and some may even argue that technically this is not what is sought to be addressed by 194R. But on a safer side, and as a prudent uh, taxpayer, it is always suggested that it is better to have your withholding under Section 194R in such cases as well. Now, speaking on tax on implications of ESOPs in case of startups. Now, startups right now have been in a lot of limelight and have always saw ESOPs as a very lucrative way to attract and retain talent. Now, to ease out, and of course, startups work on a lot of high cash crunch. So, and also need to establish themselves in the market. So, a specific uh, provision has been included in the Income Tax Act for startups issuing ESOPs to its employees. So, first comes the eligibility. Only eligible startups under Section 80 ISC of the Income Tax Act and its employees would be eligible to obtain the benefit of deferring the tax payment and the withholding tax on ESOPs granted to the employees. Now, what is this benefit? Ideally, if in case of normal employees, if I am being granted or maybe when I'm exercising my ESOPs, the taxable event arises on this very date. But for startups, they have the option of deferring it up to a period of say first 48 months from the year end in which the ESOPs are allocated, or the second in which the assessee ceases or maybe stops to be an employee of the organization, and the third is when the shares are sold by the employee. In any of whichever of these events happen the earliest, withholding tax arises and taxes are to be paid off to the government. Now, how do we compute the proportion of taxes with respect to the total income, total salary income vis-a-vis the ESOP component? Now, the tax department has simply given us a formula that please you apply this formula and go ahead with the deferring of the tax. So, the to compute the total tax that can be deferred, your first is you compute the tax on the total income, including your ESOP perquisite, in uh, and split it up into the ratio of the total salary excluding the ESOP and the total income including the ESOP. And whatever is the amount is allowed to be deferred for 48 months, or uh, or the three conditions as and when they are applicable, your TDS or tax payment comes into picture. It is also very pertinent to note that whenever ESOPs are issued by the startups, the employees are required to make disclosures under Schedule ESOP in the income tax return, such that the tax department can track of when the employee is uh, offering that amount to tax, and that amount does not go untaxed in any manner. So the reporting has been made available. Now, coming to the reporting requirements in the income tax returns of the employees who are being granted ESOPs. Now, one and this is all the more important for companies, or maybe for employees who are receiving ESOPs or options from the foreign companies. They are required and definitely required to uh, disclose the options that they have been granted under Schedule FA, which is Schedule Foreign Assets of the income tax return, and reporting under Schedule AL, which is Assets and Liabilities, is also applicable in case where the income exceeds INR 50 lakh in the financial year. Now, in Schedule FA, for in the year in which the options are just granted, your value would ideally be zero. So you'll have to state the company and make the reportings under the income tax return as given below, with the amount to be as nil, which is zero. In the year in which the shares are exercised by the employee, you will have to update that amount to the actual amount of consideration that you pay to acquire those shares. But this is a very important reporting requirement that comes into play when uh, foreign assets are specifically issued, or foreign options are issued to employees, because reporting in Schedule FA is mandatory irrespective of your income. Even if you are earning 1 rupee of income, you will have to make the reporting, and there are no uh, reliefs given in these cases. So it is extremely important to be careful for these types of reportings to be made. Now, going ahead, what would be the cross-border implications for ESOPs granted? So covering, okay. Now there are various countries which have a different timing of taxation. So, say for India, we have for the ESOP specifically, the point of taxation is at the time of exercising event, when the companies, where the employees actually pays the amount and the shares are allotted to the employee. Now, in certain countries, The point of taxation is exercise of options, as in India. In certain countries, it is at the time of granting of the options. Now, in Japan and USA, there are certain types of options if and certain conditions. So, if they are met, the taxation is at a particular time, and if not, your uh, your taxation becomes applicable at the subsequent event. Now, consider a situation where the Indian employees are obtaining ESOPs of a foreign company. So, this is our ideal scenario. Your foreign company, a subsidiary company below it, and the employees of the subsidiary company. Now, consider a situation where the employees reside in India for the entire vesting period. Your vesting period, just to have a quick recap, is the period where the employee is required to complete or maybe uh, as to go through certain conditions which will make him eligible for the exercising of the shares. So, uh, case one is where the employee is residing in India for the entire vesting period. So, in such a case, your entire uh, differential between the fair market value and the price paid or the exercise price is taxable under the head of salary as a taxable perquisite. Consider a situation where the employee is say traveling across the world or maybe traveling in say 2 or 3 countries, but for business or in relation to his employment. So in such a case, the taxability has to be apportioned in India and the other country with respect to the number of days that the employees spends in India during the vesting period. And the another question that arises is what happens for withholding in the second option. So ideally, the foreign company, it may be difficult for the foreign company to what you say undertake all the withholding tax compliances and the compliances that are required to be taken in India. The obligation rests now with the Indian subsidiary company. And now this is a practical thing that is being followed by across the industry for all the cases where foreign company is granting ESOP to the employees of the subsidiary company. Now, uh, and this now coming to the second option, second phase where the employees is selling off his shares, selling off the shares of the foreign company. Now, depending on the residential status of the employee, the tax implications may arise in India or outside India, since the shares are of the foreign company. Now, coming to the regulatory perspective, which is FEMA, these investments by by the employees for the ESOPs would be considered as OPI, which is overseas portfolio investments, subject to the condition that not more than 10% is acquired and no control is acquired by the employees. Else, it will be classified as ODI, which is overseas direct investments. And of course, there are other conditions such as the ESOPs can be granted only to subsidiaries or branch offices of the foreign company in India, and it has to be on a globally uniform basis. Now, certain filings to be undertaken by the Indian company, which is to file Form OPI within 60 days from the half year end of 31st March or 31st or 30th September as applicable. So, say for example, if the company is issuing shares and granting ESOPs within the period of say October to 31st, 1st October to 31st of March, your reporting in Form OPI becomes due by the end of May. So this is the basic reporting requirement, and this has to be undertaken by the company. So individually, the employees are not required to make any reportings individually. Now, considering a reverse scenario where the foreign employees of the Indian company has a subsidiary overseas, and employees of the subsidiaries are getting ESOPs of the Indian company. So we have the Indian holding here, foreign subsidiary, and the employees of the foreign subsidiary. Now, considering a scenario where the employee has never rendered services in India during the vesting period or the exercise period and is a non-resident, because since he is a employee of the foreign company, he may not be required to come to India. So in such a case, we have a bit of ambiguity for the purpose for determining what amount is exactly taxable in India. Ideally, since the amount or since the income does not deemed to accrue or arise in India, it is not taxable in India. However, it may be litigated considering the view and the wordings of Section 15B of the Income Tax Act, which brings into taxability or which is the charging section for salaries. However, considering Article 15 or 16, which is the dependent agent services, which simply are which can be simply referred to as services pursuant to employment. In such, the wordings of most of the countries is such that the country of residence has the primary right to tax the income from employment. Since the ESOPs granted to the employees of the foreign company are pursuant to employment, and the person is a non-resident from Indian perspective, the foreign country may have the right to tax that remuneration in entirety, and India may not have the option to tax it. However, the most important point is, though at the time of salary it may not be taxable in India, if any time these shares are being sold, the gains are definitely taxable in India because of Section 9(1), which states that any income from transfer of asset in India must be or shall be taxable in India. So capital gains are definitely chargeable to tax in India in such a scenario. Consider another situation where the employee has rendered some services in India for a certain number of days. So in such a case, we have the OECD commentary, which states that this apportionment of the income of ESOPs must be proportionately divided into the number of days for which an employee is physically present and performing the activities in relation to his employment. And uh, one important aspect that may be used as a relief is the short stay exemption under Section 1066 of the Act, which provides exemption from taxability in India in case where your stay does not exceed 90 days in India. And that is specifically applicable only to non residents. So, that is one relief that we may avail for non residents. Now, from a FEMA perspective, this would be a inward FDI, inbound FDI scenario, wherein the foreign employees would be putting in money in the Indian company. So it becomes important to adhere to the FEMA non-debt instrument rules 2019 and the sectoral caps that have been defined thereunder. If a company is ideally required to suggest or is ideally required to obtain the government's approval for foreign investment, the same would apply to ESOPs also. Then, say in case where a person who was a person resident outside India from FEMA at the time of exercising the is exercising the options when he was a person resident in India, he would be still required to hold the shares on a non-repatriation basis. So this is a very important point when the where the residential status of the individual changes. And then there is a nominal for reporting to be made under section under form ESOP. Now coming to the last aspect, which is transfer pricing. One the important aspect that arises here is what would be the nature of expenses, whether those expenses would be considered as operating or non-operating for the purpose of transfer pricing. So simply put, if those expenses are required are are to be cross charged to the foreign entity back again, it is considered as a operating expenses for the purpose of transfer pricing, and accordingly a transfer pricing analysis is to be done. However, in case where those expenses are not cross charged to the foreign company, those expenses may be considered as non-operating and no and should not be considered for the purpose of transfer pricing evaluation. We have certain Bangalore and Delhi ITAT rulings in favor of both the scenarios. So these can be referred for transfer pricing analysis specifically. So that's it from my end. If I hope this session adds some value for all of us, and hope to stay connected. Thank you so much. Any queries, you can reach out to me at the
Huh.
details given below.
Madam, there are certain questions
Okay.
which are received at our end. I
Okay.
will take one or two of them.
Yeah.
Uh, First one is ESOP tax will be long term or short term, and how we can save it.
So, ma'am, your taxes on ESOPs first arise at the time when you exercise the ESOPs. So it has nothing to do with your short term or long term. Whenever you are in employment, it will be taxable as salary. When you
Okay.
sell it,
So,
it has to be considered whether the period of holding will be relevant or not.
okay. Another question is cost of acquisition of ESOP paid
Hmm.
outside India. Then fair market value or exercise price we will take.
So, for the purpose of computing capital, I assume, and this is more relevant for the second leg of the transaction at the time of selling the shares. So, you will still be eligible to take the fair market value of the shares, which you had considered, and you will always have a fair market valuation report to substantiate the amount that you are using. So, hope this clarifies the doubts.
So before proceeding further, I would like to give formal vote of thanks. A very warm thank you, CA Delisha ma'am, for your insightful session on ESOPs. Your detailed articulation on strategic implementation, income tax implications, TEMA compliances was truly enriching and practical. On behalf of Women and Members Excellence Committee of ICAI, and on behalf of all participants, I sincerely appreciate the time, clarity, and depth you brought to us. Your experience and structured approach have added immense value for our understanding. Thank you once again.
Thank you so much, ma'am.
Thank you.
And thank you for sharing this opportunity. Thank you.
Now our next session is uh, relating to cloud-based accounting, and CA Nikita Joshi is already with us. She will start the session. So before starting session, I would like to give introduction of her. CA Nikita Joshi is a chartered accountant, DISA, and Zoho Books certified trainer. She is a virtual CFO, partner at a leading CA firm, having trained 100 plus CAs and teams on Zoho Books. She is a leader in cloud-based accounting with experience in AI in accounting, women and AI, and career paths in cloud finance. So, welcome, ma'am, and stage is yours.
Thank you so much, ma'am, for giving this opportunity. Actually, being in front of the women is itself a great opportunity for all of us so that we can share our insights with them. So, thank you so much, Preeti ma'am, also for starting this opportunity and giving the chance to speak up in front of all our CAs. So basically, without sharing much about myself and the opportunity, let me just come up to the topic. So today's topic I want to share that is cloud-based accounting. Initially, we were in the scenario say our accounting professional is mainly connected with accounting and audit. But nowadays, when we look back at 1980s or 1990s,
So there was a time when we manually do the accounting work and all these things, but it took a lot of time and efforts. मुझे अभी भी याद है. I think I my principal at the time of my articleship, he used to tell me that we used to just tally all the bank statement and everything by writing it down and telling each and everything manually. That was the time in 80 and 90s. After that, we moved to a bit of system software, that is tele based software, where we used to do the accounting, but that too was a bit of manual. But as we know and as we move forward, today is 2025. That means it is a time for upgradation and AI to come in our profession, that is accounting and audit. So to get updated with this thing, we should be aware of what is the market that is currently dealing, what is the new trends that are coming in our profession, and to get adapted to the same so that we can grow ourselves professionally as well as on our experience level too. So, and also ICI is taking lot of efforts from their end so that they can enable the members to actually implement this thing in their practice or service-based industry, or if they want to take up some freelancing opportunity. So there are many steps which are taken by ICI related to cloud-based accounting, and I'm going to cover that too in today's session. So firstly, let's just uh, come up with a basic thing that what is cloud-based accounting and what is the what we can say the opportunity that women CA can get it through the cloud-based accounting software. Okay. So firstly, what is cloud-based accounting? So cloud-based accounting means it is a software that is hosted online. So basically, if we compare with Tele, so Tele is a desktop-based software. We cannot access it at any time. Anytime and every time we cannot access the thing. But if we are aware of this cloud-based software, we can access it because it is hosted online and we can access it with a simple login ID and password. So it is available online to manage your accounts. You can access it from your laptop and even from your mobile. The accounting is made that much simple that you can access your books of accounts, or say for a person who is a business owner to access his books of accounts to check its receivable, payable, kiski payment aani baki hai, what is their cash flow, what is their net worth as of now, they can check it on a single click. So this is the benefit that has been incorporated in our accounting profession also, and we should be aware of that. So firstly, let's just take the example that suppose that we are traveling to a family wedding, and the client calls that kindly provide me a GST invoice immediately. And if we were using tele-based accounting software, we will say that सर हमारा ऑफिस क्लोज हो गया है, अब मैं आपको नहीं भेज सकती, मैं आपको कल सुबह सेंड करूँ. ठीक है. So that will be okay. If I will send the invoice tomorrow, the payment from the client will be received tomorrow, and my whole one day, मतलब मेरा जो कैश इनफ्लो जो आज आना था वो कल पे शिफ्ट हो गया. So there is a revenue loss of one day for me. But instead, if my books of accounts are maintained on a cloud-based system, what I can do on the immediate effect, yes sir, I will send it right now. मैंने मोबाइल पे ऐप खोला, I created the invoice and I directly emailed the same through the software itself, so that my revenue, and within say half an hour the client released the payment. So that is the benefit, that is immediate recognition of the receivable can be done with cloud-based software. So firstly, let's just understand what is the key features which are associated with cloud-based software. So firstly, it is multi-device. So in Tele, suppose that in Tele, if we want to protect anything, we have to make it password protection or something like that. We have to keep it password protection. But if we use cloud-based software, we can access it to multiple what we can say laptops, desktops, or devices which are available, which will require us to only provide the user access of that particular person. Say for example, आज मैंने uh, for a particular client, I want to access the books and give the access to four accountants in my firm. So what I will do, I will create separate user ID and password for each accountant so that I can know कि कौन से accountant ने ये वर्क प्रोफाइल में कितने चेंजेस किए. So I can check that too with separate user ID. But the same thing is not possible in desktop-based software. So the first feature is multi-device access, no installation required. So in Tele, there is update, manual updates, or there any types of updation or installation. Tele software, we have to particularly make this thing. Or any type of desktop software, we have to make the installation and all thing ready with the setup. But if we offer cloud-based software, then installation and all these things are not required. It is easy to go. You just have to log in on the same, and you are ready to start using your books of accounts. The third is real-time collaboration. All the updates get converted. GHC में कुछ update आ गया, automatically the same will be updated in the software, cloud-based software. अगर समझ लीजिए there is a update in say previously MSME setting, the number update, registration update was compulsorily made, so it get update immediately in the software. For that reason, it becomes very much easier to shift to cloud-based software. And also the reports that are available from this are insane. It becomes very much useful for business owners as well as for us as a chartered accountant to provide services to our owners so that they can actually get the benefit of it. And what are the key features? The fourth one is secure backups. Backups, what you can take the backups through a separate link and you can create the same. But what happens in Tele? Tele may we there are multiple backups that happens. Once we finalize something, we take a backup of that. But क्लाइंट के साइड पे क्या होता है पुराना बैकअप ही चलते रहता है. वी डोंट अपडेट द थिंग द ऑडिटेड और समथिंग लाइक दैट. We don't update the backup to that client's desktop. And what happened at the end of the year, again we have to do that thing again because there are multiple tally backups that happens and a lot of confusion get created कि कौन सा सही है कौन सा नहीं है, which is the finalized. So if we are opting for cloud-based software, then the secure backups and this manual backup system get totally reduced. Now we understood what are the key features that are associated with CloudBooks accounting. But what are the benefits that it provides for us as a women CAs? So firstly, as a woman CA, we are not solely working for our hours. We have family to handle, we have children to handle at our home, we have to handle multiple things around us. So if we have cloud-based accounting software, we can do and manage the time as per our convenience. So it provides us the flexibility that we can work adjusting our family routines without dependency of going to the office and doing the work that is specifically considered as 9 to 5. That thing is not required if we are using cloud-based software. So now, what is AI in accounting and what the practical benefits? So I understood कि ठीक है ये जो basic चीजें that we got to know. But what is the practical implementation? Yeah, what is the software? Say Zoho, Odo, Zero. What are these software provide? What are the practical benefits they provide us? So first is auto categorization of expenses. So what happens in Tele? I am taking the example of Tele because it is very much well known and we are very much used to it. So in Tele, we have every time we have to enter some of the expenses. Well, every time we have to enter expenses, pass the JVs, record sales, purchase, bank, and everything managed. But if we use Zoho, for example, then you can auto categorize the expenses. You can set up the transaction rule. Once you set up the transaction rule, that if anything related to this or denomination of salary arises, directly transfer the same to salary expense account. So once you do this setting or set up the transaction rule, you will be able to auto categorize the expenses. So next time, if any entry of salary arises in your books of accounts, Zoho will pick it up and shift it to a salary account. So you don't have to manually transfer the same under expense account. So that is the number one benefit. I talk about salary, but there are numerous expenses that occurs on a day-to-day basis for a what we can say for a organization which having large number of transaction and volume of transaction. Now, second option or best thing that people are actually moving for AI in accounting is smart dashboards. So for a non-commerce background person, if a dashboard properly describe me the total receivable, total payable, my bank live bank balances, I am sorted out. मतलब इतना अगर मुझे मिल जाए, then as a business owner, I am done with it. I am very much happy with the software. It provides real-time basis to me. So smart dashboards are a key feature why people are actually shifting for accounting and using cloud-based software. Now, it provides predictive suggestions for invoices due dates. So, suppose that my invoice, normally I issue an invoice, and after within 7 days, my invoice should be clear. That is my rule, or what we can say, my uh, that is my concern with my clients. So, if the invoice is not cleared within 7 days, Zoho automatically pops up that this invoice is not cleared. Should I send a reminder to them? So, a reminder mail is automatically generated and sent to the client so that your invoice is not received. If after the first reminder it is not received, second reminder can also be sent to the client. Again, second reminder it is not received, third client reminder can also be sent to the client. So this way, your invoice uh, reminder or what we can say revenue generation can become very much easier when we use this accounting software. Otherwise, we have to manually set up a person to call आर क्लाइंट के सर आपका पेमेंट बाकी है काइंडली क्लियर द सेम यू हैव नॉट डन और फिर वो बोलते हैं हाँ ठीक है कल करूंगा ठीक है परसों करूंगा सो दिस वे मतलब आर इनकम गेट लिटिल बिट delayed which can get automatically sorted with our less of cost as well as less by not keeping a dedicated staff for the same for the follow-up. So that is also a predictive analysis and benefit of using accounting, cloud-based accounting software. And second is automated bank reconciliation. So bank reco also sometimes takes a lot of work, but if we use system like Zoho, then definitely the bank reco feature helps us to clear the bank reconciliation within seconds because it provides the whole report that which is missing and which is suppose that, for example, suppose that you have uploaded 50 transactions. So earlier you would match manually each of them. With Zoho Books, you can match them in seconds and even it suggests the categorization. So your time saved is the hours saved weekly for more clients or the family type. And for women, CA, it is the advantage that our time is saved so that we can denote that time of follow up and then regularly connecting with the clients, with our family, and with our upscaling. So now let us understand what is the global cloud accounting landscape. Now we understood कि cloud based क्या होता है, what is AI, what is accounting. Base we understood that why it is important, why people are actually moving it towards it. Now we have to understand that what is the cloud based accounting landscape, what is the scope of work that is associated in India as well as the global level. So, firstly, the top cloud-based accounting software which are prevalent all over the world are QuickBooks, Xero, FreshBooks, Zoho Books. These are the four mostly used softwares. So, the QuickBooks recently, around 3 years back, QuickBooks top leader services in India. So, it is mainly focused for the countries outside India. So, QuickBooks then Zero is prevalent in UK and Australia specifically. FreshBooks, Sage, or Wave, they are having usages but mainly used for freelancer, not for a fully fledged business owners. Okay. So these were some of the international cloud-based softwares that are used. And if a person who is looking to get the outsourcing services or get the client from all over the world for outsourced accounting service, then you can definitely try learning all this, any of these softwares, which will help you to get clients or outsourcing assignments from outside India. Okay, and Zoho Books is if you're looking to get clients specifically in India as well as foreign countries, then you can try learning Zoho Books. because Zoho Books is a company that is uh, it is an Indian company created by an Indian entrepreneur, and it is expanding like anything, and it is having a huge potential in the future also. So, what is the opportunity that is associated as a woman CA for cloud-based accounting software? So, सबसे पहला benefit है international freelancing. See, I am a what we can say, I am a mom of a small kid, 3 years old, 4 years old. For them, I cannot move out and go to office. So I can take a freelancing opportunity. So if you are aware and very well used with global cloud-based software, any of these software which I mentioned, then you can easily take up international freelancing opportunity. Or you can take up remote CFO roles also, as well as cross-border advisory. Suppose that some of the clients are not aware of Indian rules and regulation, and they want to start up a subsidiary or something like that in India. So you can take up that advisory by learning Zoho Books, and that client is using Zoho Books. So you can start taking that benefit also. Now, I initially during the introduction, I mentioned that ICI is also taking various steps for us, for our members to actually understand and take up this integration as a part and upskill ourselves with the cloud-based software. So currently, ICI has tied up with Zoho, which helps us uh, which helps us to get the Zoho books at a very discounted price, or say a free type for CAs or professional who are practicing. So Institute of Chartered Accounting has always worked to ensure that we stay updated with changes. They have partnered. What is included in this partnership that with Zoho Books? So you can get discounted access to Zoho Books, especially for ICA members. You can download the same once you go to ICA website under CPE. CPE, you will be able to see the partnership details. Once you go to that, you will be able to see there is a drop down menu where you have to just mention your membership number. Once you mention the membership number, download link of Zoho Books and finance app will be provided, and you can use that finance app because uh, free of cost. You can use that one free of cost because there is a tie-up between ICI and Zoho. And what application will be available to you under this tie-up is first of all, Zoho Books, Zoho Inventory, Zoho Expenses, Zoho, yeah, finance, a whole finance bundle of 5 to 6 application is available under that partnership. So you can get access to all this application. Yeah, Zoho Payroll is also there. So you can get this access free of cost, and it is available for a lifetime basis. So this is a very good initiative, and we can start using Zoho Books for our partnership, sorry, for our practicing firm also. That much potential we can provide this thing. Okay. So this partnership provide official recognition and make it easier for us to adopt Zoho Books and provide us what we can say, we can expel us as a expert in Zoho Books. So why this matter, especially for women CAs? So women who had to leave full-time jobs due to personal or family responsibility can now work from home with professional tools. And certification is also issued with ICAI if you conduct, because various branches nowadays are conducting especially 3 or 4 days practical training related to Zoho Books. So you can take up that trainings also and expand upskill yourself, which will definitely help you to get more assignments related to cloud-based accounting and outsourcing services. For an example, one of my students, she was a mom of 2 kids, and she completed the Zoho Book certification, started freelancing, and now manages 6 clients remotely. That is totally outsourcing. So that is a huge potential that is associated. So now let me just focus on Zoho's benefits for women CA MSME. Women CA, I just mentioned it that you don't have to pay anything. Only the setup data is required is a laptop and a proper internet connection. You can continue your career during maternity or any relocation or any type of physical what we can say stoppage that is holding you back. You can also try this thing and get this done. Because as a person, I'm a mom of two, and my younger kid is just 1 year old. So I have taken this Zohobo things, and it has helped me to get back to the my core facilities, and what we can say my core experience of teaching and training. So it is definitely beneficial for women's lives. For accountants, it provides real-time access to clients' books. The GST returns and reconciliation gets automated, which helps. मतलब आधे से ज़्यादा टेंशन accountants का कम हो जाता है if the software takes up the GST automatic, what we can say, GST return filing from the software itself. So that is a very good benefit for accountants. Client collaboration via portals. So if you take Zoho Book subscription of a upper level, your client can be access. Your client will be given access to his particular ledgers. तो उसमें क्या होता है, if ये client want to see that how much account is pending, what is the bills receivable and payable, anything associated with the CA, then he can directly check the same through his portal. That is called client collaboration via portals. That facility is available in Zoho Box. Then you can get role-based access and audit trails. Audit trail is a very much important required that that ICI and companies had very has focused on the same. So you can get role based because each accountant or each person is given a separate user ID and password and given access to the books. So if he or she modify any of the thing, you will as an accountant or CA will be able to see that who has modified which type of thing. So a proper role-based access is provided and audit trails can be easily maintained with this thing. Then e-invoicing, vendor management, integrated banking, these are n number of benefits are available for accountant to speed up their time and provide efficiency to the clients also. And for MSME, for that is the business owners, definitely affordable subscription plans. If your company is having 5,000 plus less than 5,000 invoices, then you can opt for the standard plan that is 749 rupees per month basis. And if it is less than that, then you can opt for the free plan that allows up to 1,000 rupees. Sorry, 1,000 invoices per month basis. So this way you can check the criteria that your organization fits under which of the plans that is available with Zoho, and you can get enrolled for the Zoho. Now, second benefit is real-time reports and cash flow tracking. Initially, I told that all the things will be available on a real-time basis, which makes easier for the business owner to take decision faster and don't depend on the accountant for small things for which the decision gets delayed. And third is better control over compliance and deadlines because the software is user friendly, which makes the business owner to actually see that what is the compliance, मतलब क्या चीज छूट गई or something like that. He can get the full access and control policy. Now, I just want to briefly explain that what is the difference between traditional and cloud-based accounting software. Because आपके मन में you might be thinking that what is the actual difference between this. So let's just understand this one by one. That what is the difference associated with. So firstly, installation for a desktop-based proper setting is required in your laptop or desktop because initially I face in our whenever we got a new laptop for our staff or something like that, we have to compulsory install and do the tele settings with it, and then the software gets updated in this. So installation was required, but in cloud-based software, you just have to mention the user ID and password because the software is available like an app, and you can access it on mobile, laptop, or anything. Then second option is updates. So what happens with the updates? So in traditional, that is desktop-based software, updates you have patches or something like that is released and you have to install that patches and then run. So that is the traditional way of it. But since in the cloud base, it happens automatically because you don't have to do this, and all the software is run on a cloud based software. And third is accessibility. So mainly accessibility becomes a very what we can say a large issue Suppose that if in the corona times it becomes very much difficult for a person or for a CA firm to operate because we were not able to go to our offices. At that time, many CAs took up the opportunity and shifted to cloud-based software for their client as well as for them. For them time, there was a huge difference between post corona and second corona because they were very much easier to operate because they shifted their client as well as their accounts to cloud-based software, and they did not face any type of issue with the not going to office thing. So for a CA firm also, cloud-based accounting software can do wonders, and our offices can also get means updated, and we can work from anywhere. Then accessibility, one device, yeah, one location. It is accessibility is mainly restricted to a specific location. If the desktop is there, then it will be specifically related to that. But if it is cloud based, you can get access to the cloud based with the multiple devices or multiple locations that through different user ID and password. Then next important benefit is backup. So backup, whether you have to in the traditional accounting, you have to take manual backup, or in the cloud-based software, you can take up the cloud-based bit. That means the backup is done on a regular basis. If you want a backup of a particular day or type, you just have to go to that particular link which is available in the software and click on backup. Backup link will be mailed to your mail ID, and you can store them. And whenever you require, you can get the backup installed. Now, second feature is sharing data. So, uh, mainly in Tele, it becomes very much difficult to transfer out now the data. During the audit times, we have to just keep on the pen drive thing. Tele बैकअप लिया पेन ड्राइव में डालो या फिर मेल पे सेंड करो, फिर मेल पे सेंड किया, फिर कौन सा बैकअप था. It becomes very much confusing and very much stressful to actually look up that which backup was final. So sharing data becomes difficult because we have to keep ourselves related to pen drives and emails. But in cloud-based software, there is an instant collaboration, and you can get access in your laptop. Because if I tell you an example of Mark, our client was in Dubai, and he wanted us to just get an overview of his books of accounts. So what he did, he provided us the access of our accountant. We with our user ID and account in Excel, we just overviewed this thing. He was pointing out some of the mistakes that he did, and we just corrected the same, and it was done on a code. So the time as well as the location variability becomes very less, and it becomes very much easier for us also to serve the client as well as for the client to get the demand from the CAs. The next feature is cost. So there is a high upfront cost. In Tele, you have to particularly pay for the subscription that is associated for using Tele. Okay? But in cloud-based software, it is related to your type of organization. जैसे आपके 1000 invoices है तो आपको free version available है, free में use कर सकते हैं. If you have more than say 1000 to 5000 invoices, then you can offer standard fee. So it totally depends on the organization that which invoices, which part of level of services they are in currently, and then they can access to cloud-based software. So it is pay as you go system. Okay. So now I just want to get you a yeah. So before coming up to the conclusion, I just want to share you the pricing of Zoho that is currently prevalent right now, as well as a little 5 to 10 minutes demo if it is possible within the time, so that you can actually get the feel of that what Zoho actually is. So let me just share the screen. Just okay. Just a second. I'm just logging it. Okay, so this is the pricing plan that is associated with Zoho. Here, once you go it to compare all plans in details, you will be able to see that there are 6 plans associated with Zoho. So what are the plans? Free version, that is 0, in which you get one user plus one accountant. In standard plan, you have 749 rupees per month. Professional, 1500. Premium, and this way there are 6 plans. So it totally depends on your organization that what is your invoice level, and you can decide on the basis of that which feature actually shows for you for the Zoho plan. Okay. And apart from the invoices, there are various other features also available. Say if you want to log into payroll and integrate payroll with Zoho Books so that all the salaries and everything gets what we can say salary and everything gets involved in the same thing, so you can get integrated with Zoho payroll with it. So that is also possible. Apart from that, there are major other benefits also. Suppose that if we want to send invoice reminders to our clients, that is available in each and every plans, so that we can send invoice reminder. We can integrate our bank directly so that automatic bank fees are available and we don't have to manually enter each of our banks. So that is also possible with Zoho Books, and bank reconciliation facilities available in all the plans. After that, uh, just a second. Yeah, the one important point that I forgot to mention is cloud related to cloud-based software is multi-currency invoicing. Sorry, multi-currency invoicing. So, if you offer multi-currency, that means your client is receiving services, or your client is providing services to a number of currency, and you want to maintain that books of account. So it becomes very much difficult to actually maintain the same in Tele-based software because convert all the things at a time with all the currency exchange fluctuations and everything, it becomes difficult to actually record the same with proper precision. So for that reason, if particularly if you are having client related to any foreign currency details, then you can offer Zoho Books and get the benefit of multi-currency invoices, which is available from the professional plan, where you can maintain all the currencies, books of accounts in Zoho. You just have to mention the invoices that in USD or say in any of the foreign currency that is associated. And after that, what you can do, you can Zoho will automatically take the exchange rate of that particular day, and it will convert and book the JB of the difference, that is exchange rate gain or loss. So that is the benefit of using Zoho Books. So apart from this, this was small and very brief explanation about Zoho Books and how it can help for professionals to actually provide n numbers of services for our clients and to make the best use. And so that we should not only restricted ourselves with providing the compliance part or the system, but we should be able to come at the front and explain our clients that what are services that we can provide to them. Okay. So, madam, is it possible to take the questions if the questions are there right now?
So there is a question
Yes.
that is this for only practicing members?
So ICA is tie up with this thing. So if we look for ICA members, it is definitely for CDA members. But apart from that, if anyone is looking to get the certification related to Zoho Books, then they can connect the Zoho Books team and get certified them. But this specifically integration is related to ICA members.
Okay, so I guess there's no other question. I would
Oh, okay.
like to extend my heartful thanks to the wonderful speaker, CA Nikita Joshi ma'am. Thank you, ma'am, for enlightening us and updating us with this session of yours. And also, I express my gratitude to all of the professionals who have taken time to join the session and making it successful. Thank you so much.
Thank you. It is our pleasure, actually. Hello. Yes, sir.